dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And you're back on Liberty Nation Radio, heard coast to coast on the Radio American Network. And we're continuing our conversation with Liberty Nation's economics editor, Mr. Andrew Moran. Thanks for sticking around, Andrew. Now, you have a fantastic video out in your Swamponomics, it's called, playlist out there on YouTube and on the page of libertynation.com. And it's fantastic. Or wherever you get your videos, ladies and gentlemen. And you're talking about the U.S. trade deficit. Now, I know you find it hard to get excited about the reduced trade deficit, but this is a good thing, isn't it? Well, give us the details first, and then we'll examine the pluses and minuses.
It's exciting based on an economics thing, but on a realistic level, it doesn't. I don't get excited over it. But yeah, so the trade deficit in September. Reminder: it's October, November numbers are delayed because of the government shutdown. So the latest number was September, and it showed that it was the lowest trade deficit since June 2020. And if you exclude the pandemic, I think 2017 was the other lowest number, and it came in at $52.8 billion, and it came in below estimates of about $60 billion. And it was down from $59 billion in August, and then it was below the forecast of $63 billion. But anyway, so the trade gap was driven by a 3% increase in exports. Now, that was huge because it came in about nearly $300 billion, and that was the second highest level on record. And so that's astounding in itself. Imports were up just about, was up less than 1%. So you can tell that President Trump's tariffs are leading to these lower trade deficits. So for MAGA Nation, for Trumponomics 2.0, these numbers are terrific. Yes, terrific, I should say.
Terrific. Yes, we'll put that in the subtitle. Terrific numbers. So there's a few elements to unwrap there, isn't there? So trade deficits, they usually come from a nation-specific trade deficit will come from a number of areas. Number one, either people are not buying from abroad. They're buying more domestic. Number two, the exports from said country are increasing. Or I guess number three would be the economy's in a lull and people just aren't buying in general. So this one, you say, is led by an increase, largely led by an increase in exports, right?
Yes, absolutely.
Well,
it was like pharmaceutical preparations, financial services.
Okay. Right. That was going to be my next question. So this is from pharmaceutical preparations and financial services. Now,
and metals too, non-monetary metals. Yeah.
That's. I mean, those are three big industries for the American public. Now, tell me why you find it hard to get excited about this, Andrew. I'm really
so a lot of people, because when you hear deficit, you think, that's a terrible thing, like the budget deficit. That's a horrible thing to have as a budget deficit. So people who don't pay attention to this stuff like you and I do on a daily basis, they'll say, trade deficit, that's horrible. But when you think about just on a micro level, we all have trade deficits. I'll go to nearby grocery store and I'll have 100% trade deficit with that grocery store because they don't buy anything from me. I buy it 100% from them. It has no impact on, federal deficits or the national debt. Well, I guess you could make the case and say, okay, well, if I'm able to export more stuff, there are more businesses that are going to, get more revenue. But on a whole, there's not much.
I'd say that's a pretty compelling reason to
No, it's not. No, it's not much of a compelling reason at all. Tax cuts, that would be more stimulative for revenues than it would be for the trade.
Tis the season to wish for Christmas miracles, Andrew. Tax cuts, income tax cuts, property tax cuts. Even though Milton Friedman was what did he call it in the last segment? Yeah, it's the least bad of all.
Bad tax. Yeah. But, I will say, but I will give President Trump credit, of course, because his economic agenda, which voters obviously supported, and Besson talked about this with his, whole three-arrow growth, is that they want to rebalance trade. They want to reshore manufacturing. They want the rest of the world to be the customers and America to be the leading manufacturer again. So these tariffs are driving that. Now, whether it's persistent, whether it continues, that remains to be seen. Because a big thing with this whole reshoring of trade and the whole shrinking ice cube, as Besson called it, is that will this, I think Trump says it's $18 trillion investment from abroad and domestically, will that be realized? And if that is realized, if the whole $18 trillion, you're going to transform the U.S. economy. But of course, I have my doubts. I highly doubt the rest of the world is spending, I think Saudi Arabia, they committed $1 trillion, which is the size of their whole economy, to investing in the United States. So but even half of it, even if it's say $9 trillion or $5 trillion even is realized, that's a pretty boost for the GDP.
Yeah, I've seen a lot of criticism of these numbers, and some of it is certainly justified. But specifically to the point you just made there, for example, Saudi investing in $1 trillion, and that's their entire economy. It's not as though they're cutting a check for $1 trillion, right? It's just
no.
It's a staged investment over a period of years, and part of that will be from outside investors investing in something in Saudi Arabia, which will then invest in the United States, right? It would be like investment vehicles that they.
Yeah, I would say it, but there's no actual agreement saying, well, these companies are going to be investing. They're saying, yeah, we're committing to it, as if they're just biding their time and waiting for Trump to leave. However, a country like South Korea, in their trade agreement, they're saying, okay, fine, we're going to commit, I think it's like $500 billion, and they actually passed legislation recently codifying that $500 billion pledge to invest in the U.S. economy.
Yeah, I think again, we did talk about this in the last segment, but there are a number of pillars to support this, what some people would call like a Trump economic fever dream, which, the odds of it all being perfectly set and perfectly stable and, everything happening by the time Trump finishes his time as president is unlikely. But I guess what everybody's hoping for, everybody who decides to eschew the politics of things and just hopes that the American economy does well, no matter which party or president is at the helm. I think what they're just hoping for is there's a good base platform on which to build. And for many people, I guess the hope is that these pillars will be so stable that, for example, like with the immigration, I don't think we're ever going to go back to open border immigration because Trump has shown that it can be done. I think what many people are hoping for is that the pillars will be so stable that whoever comes into office after Donald Trump, either on that year or 4 years down the line or 8 years after that, is they'll embrace these particular pillars. Andrew, it's been fascinating talking with you. Thanks ever so much for joining us today.
Thank you for having me.
And that's all we have time for on this week's edition of Liberty Nation Radio, heard coast to coast on the Radio America Network. I'd like to thank our guests today, Joe Schaefer and Andrew Moran. And of course, I'd like to thank you, the listeners, for taking the time to tune in each and every week. And of course, wishing you a very, very Merry Christmas from everybody here at the Liberty Nation team. You are appreciated. Please remember, Liberty Nation does not endorse candidates, campaigns, or legislation. And this presentation is no endorsement.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.